Good morning, traders. This is Tony D from easyMarkets in Sydney. We've had a very positive end to the week. The markets were very overbought on Thursday, Wednesday last week, and we thought maybe that the US stocks would be in time for a pullback. But we got that positive news that the US Senate had passed the first step towards getting a tax plan passed. They got the budget passed. And so what that means is that the market's already starting to price in now aggressively the chance that the corporate tax rate might be dropped down to 20%. Over the weekend, Trump was on the radio waves and on TV suggesting that this was closer than many had expected and that they were getting bipartisan support. And that's important. You do need to get bipartisan support, and I suppose it's such a hot button issue that you need. Tax cuts are very hard to vote against. And so, if it is, as long as it's fair, then it could be a major part here that we still see the US dollar rally. The other big story at the same time, with tax cuts coming out, is the chances that Powell is going to be the new Fed chief, and his dovish outlook on effect on the outlook of future Fed rate hikes means that the stock market has a second source of support. You see the other big candidate there, Taylor, is less likely if he's going to rock the boat, given that you have seen in the last couple of weeks Trump's been very keen to accept responsibility for the huge rally in stocks since he's got into power. But a big part of that, I suspect, is on the back of tax reform. And if he can't get that passed, or if he does get that passed, then that's going to be the main reason that stocks are this high. Even then, the rally's getting to stages where it's nearing 90 on the daily RSI. That's extreme for any financial product out there. So we do have to be a little bit careful that even if it comes true, buy the rumor, sell the fact. If it doesn't come true, definitely sell. Sell that fact. All right, now the market is buying US dollars in the back of this because yields are going higher. So the 10-year and the 2-year are going higher because it could be such a stimulatory effect on the market that maybe the Fed dot points aren't as crazy as some of the market had thought. So the 4 rate hikes next year is very possible if tax cuts come. Yeah, and it's the data could improve to the point where you might see the 2% rate, interest rates in America. That's going to definitely flip some of the yield situation around the world, because that would put the US dollar as the highest yielding currency in the majors. All right, now that's the big story from last week. Now the big story coming up this week is the ECB on Thursday. We will go into that in more depth in coming days. But basically, the type of QE and how they do QE is going to be extremely important for if the euro can hold its own against the US dollar, the resurgent US dollar. There is many ways in which the euro tests lower, below that 117 level, down to 116.80 towards 116.20, the high from last year. That's if the tapering is of the sort where it's kept low for the foreseeable future. Like open-ended QE would definitely be seen as a negative by the market, and that would lead the euro to be under much more pressure than is currently thought of or priced in. You've seen that reversal from last week has extended, and today we're on the back foot. Over the weekend, just quickly though, Abenomics is back on in force because we've had Abe win a huge supermajority now with his coalition partners. So it's very likely that you get the extension of the aggressive monetary policies, and so the mandate's been given for that to continue. So we'll see if he can sort of get his sales tax through, get his maybe he's got an agenda about the military as well that might be causing a little few issues in Asia as well. But the main thing is Abenomics is up, so that's weak for the yen, and that's why dollar yen is gapped higher here. It wasn't as expected to be so aggressive the win, so the fact that he has that, it really does allow the dollar yen rally to extend. The top side now in target is that 114.50 level, which is proven too strong in the previous few rallies, but we'll see how we go when we get up there. Any sort of stock market correction in the US though would hamper this rally, so we've got to be careful about that, given that 20 days in a row stock market rally is a bit extreme. and there could be something to or catalyst there that wouldn't take much to cause a correction in US stocks, which would wreck a lot of the current techs. Alright guys, if you do have any questions about particular pairs, a lot of pairs are moving, Kiwi and Aussie and CAD as well, all moving. Please come through to the dealing room on the numbers below. If you're not an active trader member of easyMarkets, then you can join on the link below as well. You can become, you can join access to this, get some education, institutional level education in your trading, and get assigned a dealer like myself or Russell Sanford to assist you with your day-to-day trades.